Hi there, it's Bill with Smart Trades, and today is Monday, November 28th. It's around 11:30 a.m. Pacific time, and we're going to look at the S&P today as well as bonds and a couple other things. If you'd like more frequent updates, please visit smarttrades.com. I update intraday as well as I have a newsletter that goes out several times a week. Again, that's smarttrades.com. Anyway, here's some excerpts from those newsletters and the Twitter updates. On Friday, we were looking at a possible drop to around 1157. That would have been an ideal 1 equals 5 on an Elliott wave basis. This chart was actually posted before the close on Friday. As you can see, I was looking for a possible breadth divergence and a moderate new low. This is an update of that same chart actually into the close on Friday, and you can see it played out pretty well. And here is a chart posted later today. I do think that we probably have at least a short-term low and 5 waves down. Significant resistance is around 1200. That's a possible previous fourth wave resistance area, and it's also a relatively important area. The rally from Friday's lows, I think, does look obviously impulsive. We've got very strong breadth ratios up around the 2600 mark today. And here's my count. I'm counting again, and this is very interesting in that I think it's a small fractal variation of the count from the daily charts a few weeks back. I think we've got a A down triangle B wave and then a possible 5 waves down out of there. There are other ways to count this to be sure, but at any rate, this is certainly one possibility. Now here's the more popular count. A lot of folks are looking at the peak at 1292 as the top, and from there we have a series of 1-2s down. A couple of problems with that, and the first one is that the second 1-2 failed to make a new low below the first and larger wave 1. What's significant here to watch for is if we get any overlap before completing 5 waves down, where 4 overlaps 1, that will negate this count. So I think a rally, 1200 doesn't negate it, but obviously 1215, which is this low in here, would call this count into question because you would have more than likely an overlap scenario occurring. Now there's other ways it could work out. We could have a series of 1-2s down from here. It could be some larger corrective type pattern to the downside. That said, I think the area around 1215 is an area to watch, and 1200 first. If we power through 1200 with an impulsive type pattern, it probably means that there's another impulse coming to the upside, whether it be a third wave or a C wave or whatever, and we'll probably take out that 1215, which would again call the 1-2 bearish count into question. Here's the NASDAQ, a little clearer look at that triangle. I was originally looking for a possible bottom around 2200 in the NASDAQ, give or take 10 points. We obviously went lower than that. This chart, again, is dated. This is from yesterday where I was counting for a possible low. We've got that wedge type pattern, nice bullish divergence on the breadth ratios. There is a possibility we'll still go down and to that 2.62 times A. What I would bring your attention to again is this possible triangle. The NASDAQ made a high on what looks like an ABC pattern. If that is indeed the case, then that high is likely to be retested or taken out. And let's look at the longer term pattern on the S&P, and you will note our A down, again a capital A, and then an A, B, C, D, E, E falling short of the trend line, and a very sharp C wave, 2.62 times A. Again, this is a count that I had posted actually months ago, and note again that pattern and the similarity to this NASDAQ count with the very sharp C wave down. We haven't quite hit that 2.62 relationship to A yet, but the overall patterns, again, very, very similar. Now here's some more detail on that count in terms of how it may play out and how I'm counting it. We've got just about a 62% retracement of wave A up down to the lows on Friday, And from there, actually this chart was posted over the weekend, and from there, if indeed this is an A up and an ABC B down, we're likely to take out that 1292 high, or at least retest it in the weeks ahead. Again, the area to watch is 1200 and then the 1215 area for overlap, and to see if indeed these rallies continue to be impulsive off of Friday's low. We still could go down a little further in this context, down to about 1.62 times A. That comes in just under the just under the 1140 area, basis the S&P cash. So even if we drop down, we aren't necessarily going to negate this count. However, I would be a little concerned if this rally fails to punch through S&P 1200. Now, here's the two scenarios longer term. It is certainly, again, possible that we do have a peak here at 1292 and change. If we don't break out above 1200, or better yet 1215, it's possible we are going down. In either case, I want to emphasize this, I think eventually we're going down to test about S&P 1000. The difference is in these counts is obviously if in fact this B wave is still in progress, or wave 2 if you prefer, we're going back up towards 1300 for one more test. And again, that's certainly a possibility. Let's watch the 1200 area. I'll update this on my newsletter and also on Twitter on a day-to-day basis as it develops. Here's a chart also from Friday looking for a possible bottom in Apple. I think Apple is key. You'll notice on this decline, Apple's volume was declining. It's, I think, best counted as a corrective decline. It's possible we can count this as a series of 1-2s to the downside. At any rate, we were calling for a bounce on Friday, and indeed here's a chart from earlier today showing that we are getting that bounce in Apple. The area around 410, just under that 409.33 is crucial. If we can take that out, this indeed is a confirmed corrective decline. A failure at that level, or better yet lower, say to get through about 390, indicates that perhaps we've got another leg down in Apple, and I think Apple will tend to continue to be the leader. Another market or stock to watch very carefully here is Bank of America. Bank of America is trying to put in a double bottom around the 500, 513 level, and I think if it can do that, I think that's going to be supportive for the market. On the other hand, an acceleration to the downside in Bank of America is obviously a bad sign for the broader market as well, and it's something that I would watch. I think if Bank of America goes under, it's obviously bad news, not just for Bank of America, but also for the broader market. Excuse me. Here's a projection. Again, we were looking at the 132.25 A equals C area for the Euro FX. I had actually looked at a support area a little higher than that first, but indeed we've got a nice ABCX, ABC down. Some folks are counting this as an impulse wave. I think that is possible, but it's not likely, because note all the overlaps. We're overlapping here. X overlaps into B, B overlaps into X. I think that we need to rally back through about the 134.30 area, get through this trend line and the bottom of this A wave, which is going to be resistance, its previous support. If we can do that, I think that we're going to see a rally in the euro. That said, certainly the euro has been acting weak lately, so if we do get a corrective pattern, one that in particular fails to take out 136, I could be wrong. But again, the overall thing here is that we've got a situation of overlapping patterns, which tends to favor a corrective pattern. Here's the Euro British Pound. This is something I actually noted in my newsletter, that we had significant number of swings right around this 86.56 level, and indeed we took that out very slightly late last week and failed, even though we had a little intraday buy signal down here around the 85.60 area. At any rate, these are the kinds of things I try to note, as well as the stock indices and individual stocks. Also, we had a target for the bonds around 144, 144 and a half. They exceeded that somewhat, but the basic pattern A, B, C up is intact. We did indeed fail and broke down below that 144.16 level. And here's the 20-year TLT bond fund. And again, very clearly you can see here that ABC, we're not quite to an A equals C, which is ideal. Nonetheless, we're right in at about 78% of A. And so I think that this best counts, you've got overlap on the top of A. This best counts as a corrective rally in the TLT and in the bonds. And I think longer term, obviously that favors a rally in the stock market, in that bonds have been counter trend to stocks in recent months and even the last few years. If you like these videos, please hit the like button if you would. Also visit smarttrades.com. There's a link there to my Facebook page, which has frequent updates as well. They're not as timely as my actual service, but I do post charts there on Facebook, and sometimes it's easier to do that than to produce an entire video here. So once again, visit me at smarttrades.com if you'd like to see the Facebook page or subscribe to my newsletter. All this is for educational purposes, obviously. Nonetheless, thanks for watching, and have a great week. Bye-bye.